Good day, everybody. It's Greg Schnell, and I am here with the July 27th edition of the U.S. Market Review. Thanks for taking the time to join me. I've titled it Trapped in a Bull Market, and the reason is because we've got so much disparity between some of the major economic indicators, and of course, the tech stars just keep rocking. So, want to talk a little bit about that. We're going to get into it right away here. So first of all, to find my blogs, StockCharts.com, go to Articles tab. There's a drop-down menu on the right, and just look for the Canadian Technician. Don't ignore this chart and chart watchers. And please hit subscribe at the bottom if you're interested. Contact information, Greg S. at StockCharts.com, on Twitter at Schnell Investor. And our agenda. FANG, MEGA, whatever, they all had a great week. Even Amazon was only down 1% or something, and we've still got Apple coming out, I think, next Friday. The US dollar move's really starting to be important. I'm noticing that in a lot of places, especially in the commodities arena, so we're going to talk about that. Breadth is a little odd here, and I'll get into that. But, Thursday, Friday, we're very bullish for some of the tech stuff, and yet breadth didn't really kind of keep up, so a little bit odd. Russell and the TSX, I still think they're problematic, and until we get a fine move there, I think the TSX is 6 or 7 weeks sideways in a tight range. Copper is frayed wire, and again, I think being aware of just where copper wants to go is pretty important. And then I want to cover off a little bit about remember the last time rates dropped. So let's get into it. Okay, first of all, let's just go and look. I just did a quick search. Fed rate cuts 2007. Obviously, I didn't even type that very well. Fed rate cutes. Anyway, the important thing that I want to cover off is September 18th, 2007. The Federal Reserve cut the target on a short-term interest rate by 0.5 percentage point in a bold acknowledgement that the central bank is concerned about. And we don't even need to know the rest. I think we all remember. This one was particularly interesting. Fed cuts rate to 4.5%, so another quarter point, and lowers interest rates by 1/4 point to keep the economy on track. But the central bank's inflation concern signals another cut is unlikely. So this is just 6 weeks later. And remember, the stock market ended up topping October 9th. And I think the Nasdaq topped around October 21st. But anyway, signaled another rate cut is unlikely. But now I want to show you this page. And this page shows us that in 2006, the Fed actually increased or was increasing rates all the way through 2006. And then June 29th made it its high. And then roughly, 14 months later, 15 months later, they made their first reduction. And again, right here, September 18th, and we had 1.9% unemployment, and then, 1.9% GDP, and I think the recent number just came in at 2.1. Unemployment was very, relatively to now, it's very high, but it was 6%, which was considered pretty good. And then inflation was a lot more than we have now. So anyway, home sales fell was one of the things they noted. But then that October 31st safety cut was in there. And then they've noticed here stock market peaked and recession began. The stock market actually peaked October 9th, I think we all remember. So anyway, and then it was a pretty steady stream lower. But I think what's interesting is everybody thought that, the Fed was helping when the rate cuts started, but I think the acknowledgement by the Fed that something's going on in the undercurrent is pretty important. So are they just taking the cue from the stock market, or do they actually have data that they're worried about? And obviously, I don't think the Fed would just take the stock market data. I think there's a general consensus that there's other stuff out there. So I do want to use this as a backdrop, and the reason I want to use this as a backdrop is just so everybody doesn't get too complacent with the fact that the stock market, just seems so euphoric. So I want to bring that point out. Now, here's one of the interesting charts of the day, and we can just see that here's the Nasdaq advanced decline line, and even though it was a pretty bullish week, Thursday, Friday, down and then up, but we're still, even on Fridays, new all-time highs and surging. And you'll notice back up in here in April, remember the May top, we basically surged up. We were testing this trend line all the way up and then kind of fell apart here. So we still have another week before the end of the month. We have the Fed meeting on Wednesday. I get the feeling it's a sell the news event. But anyway, I'm going to keep watching that. And again, we could draw a trend line under this, obviously. But when these trend line breaks, I think it's pretty important to be aware that, something might not quite be right. So, something might not be right. Yeah. Okay. Getting on to the high lows. I covered some of these off on Friday in my market buzz, but I want to highlight them here just a little bit. The bottom line is through this whole rally, we really haven't had a whole bunch of participation from the wider Nasdaq high-low. And the Nasdaq Composite has broken out to a new high, no disagreement there. But look at how weak this looks in here. And the point I will make is that, we just haven't had this euphoric run like we had in here. So while the market has rallied off the lows, and this is good enough for a rally, I don't think it's sustainable at this rate. So that's a concern. Now, the Nasdaq, it does have a negative bias. So let's go to the New York Composite, and it looks better. These are pretty big mountains here, and they looked a lot better. And you can see that you can have this trait go on for a long time. But in 2018, again, we were kind of getting back to what we had lost in January. So here's the January fall, and then the stock market kind of went sideways to up. Meanwhile, the advanced decline line was rising. Well, now we have an advanced decline line that's rising to new highs. And again, back here we had an advanced decline line rising to new highs. But we never did take out the prior high. So we're sitting here in this kind of conundrum. What's going on? And do we have enough momentum? And the one thing I'll note again on Friday was the advanced decline line didn't take out the prior high, even though the stock market did. So it's concerns like that continue to lag or continue to concern me or bother me, that we're not able to kind of get this rhythm going. So anyway, this looks particularly bullish to me. This high-low level is above 200, so that's normally very bullish. We did see that back here in this 2014-15 timeframe where we got up here, but we never really, once we started to break down, that was a pretty big deal. So in May, we had that big push down. Was that the warning shot? And now we're just kind of getting our last hurrahs in. Well, we're still up nicely, and you notice the stock market kind of topped out as this was declining. We don't have that showing up yet, so maybe we still have weeks or months left. On the advanced decline line for the S&P 1500, we did push to a new high here, so that's more encouraging, and that index also pushed to a new high. So again, the big tech stocks are doing great. They're doing a lot of heavy lifting. That 25 billion buyback by Google was a stunning number. And it's amazing how quick everybody forgets about all of the regulatory issues when they came out with that number, and their earnings were pretty strong. So all of a sudden, boom, the stock was up, and that really did help carry Friday. I want to point out a couple of things that didn't happen. The semiconductors didn't rally on that news. And again, let's just keep watching to see what goes on here. But I get this conflict in my breadth signals that aren't enough. The Canadian market, the same thing. We didn't hit a new high here. We're still a lot lower than last year. We're a lot lower than April, and haven't been able to break out. And again, I think a weaker market is pretty important to be watching for. So if Canada starts to break down, I think you could expect more issues in the US. Now, we haven't broke down. Again, we're still up in this top range. But, for 2 years, we haven't been able to get net new highs above 20 really on this moving average. So we take an 8-period moving average and just, we're kind of stuck under that level. Well, we haven't been able to break out, and it's much like the 2015 period. So I continue to say, keep watching this. It doesn't seem strong enough to me. It doesn't get us in this euphoric rally zone here, which I'd really like to see. Okay, high-low data starting to drift lower, but we're still okay by this. This is merging 5 days together and just kind of seeing what you get. Here's the NYMO, and you can see the McClellan oscillator closed at 2. Not very high, but nonetheless better. And then what we see over here on the NYSE is that we're rallied up, and we haven't been able to start turning back up yet here. But this 800 level, just walking across the chart, is just fine. There's nothing scary about that level. You've got plenty of momentum when you're up there. I've got this dark line at 400, and when this crosses below 400, that's usually a more important inflection point. And the one thing I will say is we do have this lower high, much like we had in January, and all of a sudden things fell apart here. So that's the one caution I would kind of roll out. I will say that the the market breadth has been okay. It's just been concentrated in one area, and that would be the tech megastars. So from that perspective, it's very good. But if I go look at the old economy, and I'm going to get into the transports here in a bit, and I wrote an article for the chart watchers this weekend about the transports. Go check that out. But I don't think this is bullish that we're starting to make lower highs on the NYSE summation index. The last one was the Nasdaq. So anyway, sorry, not the Nasdaq. I think the last one here, let's go back, was kind of a zoom in on the New York summation index. There we go. So this is the New York summation index just going back 2 or 3 years. This next chart is the same index going back 20 years. And what you see here is starting to lose momentum here. Doesn't mean it's over, but this is typically where we would normally reside in terms of momentum. In 2015, we're kind of right at the level that the market stalled out at. In 2017, 18, we were up around this level and still able to maintain a pretty good uptrend. I think the big thing that I'm watching for here is if all of a sudden we start to see a real sell-off in commodities and commodity-related stuff, is that enough to kind of start pulling everything down? So that's the thing I'm watching for the most here. The Nasdaq McClellan summation index. So again, this is taking the McClellan oscillator every day and then adding it up and getting this summation index. And what you see here is, even though we had such high news here, this thing is not continuing to go higher. Now, it's not bad. It's just barely off the highs, but that's kind of how highs are made, where you get there. Now, this is rolling over near zero. The one thing about this summation index is usually it breaks down around the minus 200 level. So we're not far above that, but we still would need to see further weakness for that to happen. Okay, all of the bullish percent indexes, I don't really have a whole bunch here. It jumped from, down 49% to 53%, so 4% of the market moved above its 200-day moving average. That's probably pretty good. And then we have 52% here, so not a huge buy signal. Again, the big thing I'm noticing is all of these little consolidations, and then the market fell apart here. So I'm watching closely to see, do we actually have the spark to get us much higher? And I didn't move all these green lines. I've just kind of left them where they were because we haven't moved much off them on any of the charts. The Nasdaq 100, I don't know. Do you think this is odd that even with the big bullish move we had on Thursday, Friday, Friday, that all of a sudden this chart is losing momentum? And I think the Nasdaq was up 180 points or something. Like, it was a pretty big week, and yet this bullish percent index actually dropped, and the percentage of stocks above the 200-day moving average dropped by 1. So let's not get too carried away. But again, I think that's surprising that the tech was starting to weaken a little. Bullish percent index for the New York Composite, hovering around this 57 level. It's been there for a month now, so nothing really famous. And then down here is 66.95 for the percentage of stocks above the 200-day moving average. And again, that's just barely in the range. So want to keep watching that. Now, here's a surprise, I think. S&P 500 actually pulled back almost 3% on bullish percent index. And the percentage of stocks above the 200-day moving average is still holding up. And again, this is one of the strongest indexes, well, probably the strongest wide index in the world, and it's still holding up. But one of the headwinds, I think, that comes to face the S&P 500 is this US dollar. And I'm going to cover that off in just a few minutes. The Canadian market rallied up on the back of the gold stocks taking off, so that's pretty good. And we're at 65%. again, not uncommon for the Canadian market to get this level and kind of have a pullback. So keep watching. Okay, so that's the bullish percent indexes. Again, I don't think there was a whole bunch of information there, but something to watch for. Here was the options expiration, and we're still kind of wiggling up around this level. We had this same sort of condition back here in September of 2018 when the market went on to new highs, kind of spent 2 weeks up here and then fell apart. And when it fell apart, we were very close to a Fed meeting. So here's the September, October Fed meeting. We were right in this kind of same range. And again, we held up for a few more days and then fell apart. The point I want to make on this is that we hit new highs here. We're right around one of those big meetings. We had a lot higher volume yesterday on the sell-off than we did today on the big rally. And again, that's kind of the lowest volume Tuesday, Wednesday, Thursday, Friday. It was the lowest volume. So just be careful here. If we're running out of buyers, it wouldn't surprise me as we head into the Fed meeting. Monthly performance, until yesterday it looked like nothing, and then Friday was a pretty nice run. So that, without question, you're making new highs, you're bullish. So you just need to be, to me, I want to be watching for some of these trend changes on all of the other stuff, and still continue to watch for that. Year-to-date performance, we're up 20% from the year-to-date, and again, off the 2018 December lows, we're up like 30%. So pretty solid. Looking at the bigger picture just on this chart here, weekly, you can see this looks bullish. We're up and to the right, nothing wrong with that, making higher highs and higher lows. The Nasdaq had a really nice push above resistance here. Now the real question for me will be to watch and see if this is a false breakout and we turn and return down. Now I do want to go get one chart for you, and I'm just going to go grab whatever the SPX, and we're going to take just 1 minute here, change the settings. So again, anytime you want to go pick some point in time, you can pick this start and end date. And I'm just going to go back and pick 2006, and I'm going to make it 2008, 01, 01. And what I want to point out is how the market behaved here. So 2007, we had a big pullback in March, and that was kind of a very clean uptrend. Pulled back, nice clean uptrend, jogged sideways into July. Late July, all of a sudden fell apart really hard, and then bottomed mid-August, and now we rallied on, and we barely took out the highs here for a couple of days. Shot up one day, had big intraday reversal with an outside bar, and didn't close near the lows, but closed in the bottom third. Spent a day trying to figure it out, and then fell apart. And then we came back to test this high roughly 2 weeks later, and we're unable to sustain it, and that pulled down hard. I think the Nasdaq, that was when it topped, if I'm not mistaken. So let's just put that in here. So same sort of time frame. Yeah, actually it went all the way into October 31st and then started to wobble down. And again, all of a sudden you had this 4-day drop that was massive. And that was at the end of earnings, right? So October would be your earnings month, and all of a sudden it just fell apart, then wandered sideways. And while that didn't feel too bad, of course, it got a little worse when we roll out the tape. So we don't know if we're in one of those. I will say that the Fed dropping its interest rate in September, and then another one in October saying we probably won't do anything again. So here's those dates for you again. October 31st, right as the Nasdaq topped out. Let's go find it. So as the Nasdaq topped out right here, and then we wandered down, spent a couple of months going sideways, and then it fell away, and we were back below the 200-day moving average. We're a long way from all of that as we are right now, and so the big thing for me is we're setting up in a similar sort of posture with quite euphoric thinking, and everybody, I got friends who think the market's going way higher from here. And I would just add caution here because there's some things changing. Now, let's just go look at one thing. So the railroads actually didn't do anything in here. Interestingly, they outperformed once the market started to break down. But it was this main uptrend that was starting to be a concern. And when the railroads broke there, I think that was a pretty good clue that something was changing. We have that same condition now, and I want to keep watching for that. The one thing I will say about the railroads is their business is pretty stable. So try to keep watching this. Now, this chart eventually breaks. I think it's... yeah, all of a sudden took, really when everything imploded then in September with Lehman, all of a sudden that was a big move down. But the railroads, for the most part, continue to outperform. But it's this wave in here where it actually started to break down that was a pretty interesting place on the chart. So just be aware of that change. Okay, let's get back to what we were covering off. So again, we're testing these new highs and we're trying to break out, and I want to continue to watch and just see how that works as we head into this Fed meeting where they're going to start lowering interest rates. And then the Russell, of course, hasn't participated, and so one of the things we want to wonder about or worry about is why hasn't it, and why are so many stocks being left behind, and we're kind of in the top 100 here and the top 500 here. We'll just continue to watch and see how this unfolds. So again, real surge off that June 1st low coming up, and we're trying to hold this breakout. We're at 30.25. Well, I think that's a good place to keep watching just to see if we have enough energy to go higher, especially on the back of these earnings. So here's the Nasdaq, and it's still outperforming the S&P 500. And usually most of the major trend changes happen when the Nasdaq starts underperforming. You can see we're right on that trend line. If all of a sudden on the homepage of StockCharts, just let's go there, on the homepage here, just watching this table, when all of a sudden the Nasdaq, today it was up by, or Friday it was up by 1.1%, starts to fail, and you have the S&P up 0.74, and this one's up, 0 or 0.1, 0.2. The Russell starts to underperform. Those are days that I would get more concerned that we're starting to have that, especially when we're close to this outperformance trend line that I mentioned here. So just keep that line in mind, and if we start to break down from it, just watch how the Nasdaq is performing. And again, if it starts to underperform dramatically, I think that could mark a top. Now, the other thing here, you'll notice a little bit of a lowering in momentum. We're still up around 1%, which is usually pretty good. But we do have a sell signal currently, and now we'll find out if this is just going to turn and break higher. And again, if it does, that's really good. But one of the problems we've had is the breadth indicators have been flat or muted while this rally has taken place. So that's something to be aware of. Again, the Nasdaq 100, just a big bull, right? It just keeps trending higher, much like the railways keep trending higher against the S&P 500. And this would be another place to watch for if all of a sudden they start to underperform. So one of the things that happened 2 weeks ago, not this week, but the previous week, Microsoft reported, yet the Nasdaq went nowhere. This week, Microsoft, or there was 3 or 4 other names that all of a sudden started to perform well and kicked up, and I think that big advance in Google also helped the chart. But we still have this declining trend in momentum here, and watch closely. Right now we'd have a negative divergence if it rolls over here. So we have a higher high at the end of April, and then we'd have a lower high here at the end of July. Okay, all of these charts, I'm going to just skip over them because there's not a whole bunch new that I haven't covered off. I do want to touch on the Russell, and it's sitting on this trend line, albeit with a lot lower relative strength. Now, eventually it bottoms out, and that's a nice place to get on board. We haven't really got that yet. But we also see this downtrend, and it is above the 40-week moving average. And over here in 2015, it went below and couldn't get back above, and that was a pretty important inflection point. So are we over here where we have the downtrending 40-week, we're back above it, and we start to bounce off it and go higher. Maybe that's the case, and that would be bullish. We're sitting right here with the Russell up against this downsloping PPO, and if this starts to roll over here, when the Russell goes negative, that's a good place to be aware of. And obviously, if we unwind the tape back a few years, you can see back in 2000 and 2003, the Russell stayed negative for almost all of the time. In 2007, it was negative all the way through 2009. 2011, that big dip, and then 2015-16. So all of these are important, and again, you have this pullback, and then you have this attempt to rally above, and if it fails, that's kind of one to watch. And we're sitting right here, and this, last week it was turned down, this week it's turned up, so it's still trying to find its way here. But this was a nice outside week. That is very bullish. So want to keep watching the Russell. Maybe it can finally get going, but so far it hasn't done that. Okay, Toronto, this is just an amazing chart. We are trapped in the sideways range. So 1, 2, 3, 4, 5, 6 weeks trying to get through these prior highs. In April, we were up here for 3 weeks. And in July, we had broken through the prior high, and we, much like the S&P did this week, just kind of pushed up and closed right at the high. So we want to watch and see if we start to get bars like this out of the S&P, or are we able to just keep marching? And that would be pretty important. So big week coming up for all of the markets, I think, with the Fed meeting in the middle. Usually the Canadian market would be stronger if we're going to keep going higher, and if it starts to give way here, I'd say if we start to go below this 10-week moving average, this might be the 20 actually, because I've got it in brown. 20-week moving average. So if it starts to go below the 20-week moving average, that would be the center of your weekly Bollinger Bands. That would be kind of an important place to watch for. So that's coming up this week. XVG, this one bounced again. This is the arithmetic or geometric mean. And what this does is it gives each stock the same weighting, so it doesn't matter about market cap. So a junior is as much as a senior. But we're still in a downsloping 40-week moving average, and we're trying to rally above. There are some places where we did that on this chart, and that was a great place to get on board when it finally did turn up. So again, we got a whole bunch of indications that aren't great, but we also have a few things, starting to turn. Like the semiconductors had been performing pretty well as of late. They've been on an amazing run. The truckers are right at resistance on the transports. The rails are starting to underperform. So there's a whole bunch of mixed messages. Banks are trying to break through their highs, and I think some of them were able to successfully do that this week. But we want to keep watching this and just see. But we have this downtrend right now, and again, we're above it, and we're trying to hold above it. Last week, it looked like we were going to start to break down again, and we had a ricochet back up. Let's see if we can get going and finally get this index going. So our PPO is right at 0. We'll find out if we have any MACD. Sorry, find out if we have any ability to go higher. Looking at a couple of markets around the world, the Shanghai closed near the top of its range, but basically that was the same as the last couple of weeks. So we're just kind of traveling sideways, full stochastic, just holding near the bottom of its range. Looking at the Nikkei, this is the one chart, and I've said it so many times, that worries me, but we're stuck under this 40-week or, oh, no, actually in this case I've got the 252-day moving average, and in Japan they actually use different time periods than we do in North America. They use the 252, which is a 1-year moving average, and you can see we basically touched it on Thursday and pulled back on Friday. So unsure about which way this wants to go. Continuing downtrend in relative strength, and obviously on Friday, if it was down and so was the S&P was up, this would just continue to go lower. So we're going to keep watching this. Remember, the S&P has just taken out its September of last year's high and moved well above that. What we're watching for here is, notice how this is not performing very well and isn't even able to get back up into the prior ranges. So this chart's pretty weak, and wouldn't take much for it to all of a sudden start to fail. Maybe I'll just open this up for a second and just show you kind of the 2-year picture So, we got up in here in October of 2017, and we're just kind of hovering in this range and have been struggling to get going. So, I continue to watch the Japanese market. I think it is a big problem. If it starts to really unload, I think that one would be something big enough to cause some sort of an 07, 08 situation. Okay. Anyway, not to dwell on that one, let's go on. The US dollar, this one is the big one that's really started to change. So we had this big breakdown June 22nd, outside weekend. I called it green, and the reason I called it green was because all of a sudden you got the rallies in a whole bunch of the commodities, and you started to get merging markets trying to pick up and all that kind of stuff. But what did it do? It put in like a doji the following week, and now it's been up, 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 and away. And now we're looking at taking out new 52-week highs here are within, shouting distance this week. So this is a pretty important place on the chart. And I think if this starts to take off, that we're going to see a lot of pressure on that gold trade and on the oil trade. And look at the PPO just coming down to this trend line, and it looks like it wants to bounce off zero and head higher. And if you followed on some of the other shows I mentioned, this came down here, almost got to zero, and then bounced and headed higher. And this was a pretty significant move in 2015. This is also when the stock market really broke down hard in 2015 into the 2016 low. And when the dollar rolled over, everything started to rally. So if I just put up, we'll overlay the S&P 500 here. So you go select price, and now we're going to pick behind price, and that's going to put it behind that US dollar chart. We'll just use a solid line, and we'll go with red just so it's different. Where are we? Red. And put that on. Now again, what do we want the chart to show us? Well, my point is that we bottomed just as the US dollar topped. And then once the US dollar pulled back, everything was kind of getting going. And then even as the US dollar started to migrate sideways here, this finally broke out and took off. And then when the US dollar actually pulled back all of 2017, it was a great, glorious rally. US dollar bottomed, stock market topped. It's not always like this. But in this particular case, I think this sudden reversal on the US dollar here is going to put a lot of pressure on commodity countries and other countries around the world. When the US dollar is raging forward, the emerging market charts don't usually do well. So we'll continue to watch that. You would think it would be somewhat of an advantage, but I think the problem is the rest of the world is weak. Global trade is slowing. And if the US dollar is the strongest thing in the world, it's going to push everything up. But again, 50% of the S&P sales are into the rest of the world. So all of a sudden it makes what they sell more expensive. So we want to keep watching this chart quite closely. Okay, just more looks at the US dollar, this 97.50 level. For those that have been with me for years, we've been talking about it for years, and we're trying to get back through it again. And so this last week we were slightly above it. This week we're a little bit more. And we've now turned up here on Martin Prink's Special K. And are we going to start to break out here? And if we did, I think that's a pretty important inflection point on the chart. You can see down here, if we drew a trend line across these peaks and all of a sudden it went ballistic in 2014, that's obviously when crude also failed. But that was a big move up. So let's keep watching what's going to happen with the US dollar, but I think it's one of the key triggers that if the market was going to reverse here, it might be a soaring US dollar that causes that. So we haven't taken out the highs here of 98.05. We're at 97.75. Let's call it spitting distance away. But we have broken this PPO momentum downtrend that goes on almost a year. And it looks to me like it wants to run higher. And again, a lot of times we can triangulate these spots on the momentum curve, and when they start to fail, that was a good place to be aware of. And that was started the June rally, right? So May, at the end of May, when the US dollar topped and everything kind of fell, there was a big rally. Now we've kind of worked ourselves against the other way, and this appears to have been a false breakdown, and now it looks like we're going to take off to the other side. So I think the US dollar is the big picture here, and we'll keep watching to see what's going to happen. But a soaring US dollar, I think, could could be a big deal. And it looks like the Euro PPO is going to roll over below zero, which would agree with the US dollar. Again, this is heavily weighted in the US dollar. So if this was going to break lower, then we're going to start to see big pressure from the euro going down and the US dollar going up. Again, we have 5 trade agreements that haven't been signed. China, Japan, Europe, now England, and the Canada agreement appears to be scheduled for the fall from Congress. They didn't get to it before they took their summer recess. So we'll see if any of these deals get signed. But I think this slowing global trade is starting to add up. So anyway, that's one of the things I'm looking at. The Swedish currency, I keep watching that for trend breaks. And again, it broke out here and we started to see a move. Well, now it's rolling down and we're on our 3rd week of lower highs. So that's a problem. And you can see this is rolling over down here at a very low level. So as long as that's going to happen, I think that's a big issue. That kind of tells me the euro is going to keep breaking lower as well. British pound, I've marked on here that Boris got elected this week. And so we'll see if that changes the chart. We're still trying to, we're still holding above the levels from the 2017 lows. But as you can see here, this chart looks pretty weak. And if the English or the UK stock market keeps going higher, is it on the back of the lower currency? Everybody thinks a trade deal will be easy to come by. I think there's so many trade deals that aren't done here. That's what's going to slow global growth. And I think if there's a clean exit from Britain from the EU, well, I don't expect trade to stop. I think it's just another hurdle that they'll have to get through until they get it figured out. So it's all of these things that are starting to weigh as a dynamic, in my opinion. British pound here, we're 2.5 years on the lows. And again, even with Boris, this thing kept dripping lower. So closed right on the lows on Friday. Japanese yen had tried to break out, stalling here. Pretty weak chart. This is the lowest close since late May. So we'll watch if this is going to break down here. I expect gold to roll back over. And again, the PPO isn't bad, but it looks to me like it's going to hook over. And if that's going to come back down again, all of these currencies against the US dollar, if they're all going to start to go the other way, so all of the foreign currencies lower and the US dollar higher, I think that's going to make a difficult move for commodities and for these other countries. So we'll just see. Japanese yen just shown differently here. So I've got this big picture chart. And what we were wondering is, are we going to get this big break like we had back in 2012? And when the yen fell, that was pretty good for the Nikkei. Well, now we've been jogging sideways to lower here while the currency doesn't know which way it wants to go. So we'll keep watching. Maybe if this can move lower, that'll actually help the Nikkei turn higher. Usually it does. This chart looks so weird here, so odd here. I'm not convinced that that's the outcome. Okay, Canadian dollar has rolled over to just basically hit resistance and failed right at 77 bucks and rolled over quickly. So again, another commodity country dropping. We don't see the same thing though when we look at the Aussie, which is kind of interesting. The Aussie had a big outside range. Well, I guess it's not breaking down its lows, but it got to this horizontal level. It's trying to fight around here. I don't want to call it over yet, but that was a pretty big outside week here. So I think there's some big changes happening in the currencies, and with all of that adds up to me that it could be a potential for a stock market direction change too. It doesn't have to, but a lot of times you'll see all of the asset classes change near major market tops. Like this one, emerging market currency 2018 January made its market top. Here we are sitting right up here as this emerging market currency rolls over. We'll see what happens, but hasn't done anything for 4 weeks after the big breakout. So I think the momentum has stalled there as well. Okay, let's quickly fire through the bonds. There's not a lot of information here, but the high yield is trading kind of in the same range for the last 6 weeks, sideways momentum, so no real change. Government treasuries still holding up here, haven't rolled over yet. And I know a lot of people think when these government bonds roll over, all of the money is going to move back into the equity market, and the equity market's going to have this big, massive run. Fully understand the argument. We'll wait and see if that plays out on the charts. I have this chart down here quite a bit further. And what this chart implies is when this trend breaks, the move in these bonds can be huge. So this is the yield spread between the 30-year and the 10-year. And when this starts to accelerate, these big breaks on the chart can be very meaningful. And again, in 2007, obviously, it was quite an odd spike. But look at when it happened. The spike happened in late 2007 and went up all the way into, call it Jan-Feb, pulled back down into the October timeframe, and then rallied for another 2 years after that while the stock market was on quite a rally. So it's this change in trend that I'm looking. Same thing in 2000. So until I see this chart sort of stabilize, I'm not convinced that the money's just leaving the bond market. I think the bond market spread might return to normal. And what I mean by that is that all of these near versions over here, so this is the 30-year, this is the 10, the 5, this is the 1 year. What we want to see is have them return to this kind of sort order. And when that happens, I actually think that's when your stock market makes a big move down. But notice how big the spread is getting between the 30 and the 10 here. Well, what happens is the 10 kept moving down and actually got farther away back in this 2007, 2008 timeframe as everything started to expand. That was when we saw the biggest move in the spread ratios. And so that's kind of what I'm looking at. And again, I think this looks pretty similar to back in 2007, in 2000. And obviously it's been early. These charts have been near, below 52-week lows for a while on yield, and yet they continued to held up. I do want to point out the 2 year because it does try to look like there's a trend change here. And it's trying to shake it up. Now the PPO is just coming back to zero. So if this rolls over right again, that's the kind of thing we saw in 07, 08. And again, big wild swings that started to happen. But this swing here pretty much wasn't until the stock market bottomed around the end of March and then went on a big surge into May. I didn't realize I had not turned off my notifications. Let me just do that. Thanks. Okay, so with that, the one thing I will say, as this stock market, as this chart shows, this 3% level is pretty big. We're consolidating in here. We haven't really started to break out yet, but let's watch and see if this PPO rolls over right after returning to normal here. That wouldn't surprise me. And again, it's that whole 07, 08 period where we had this big downtrend in here that really started to catch attention. So if this rolls over right now, that would be something I'm looking for. But so far, it's pointed higher, not lower. Okay, and again, this trend line says the same thing. Now, if it just gets here and rolls back down, that's something to watch for. So anyway, keep aware of the bond market. I think there could be some clues, especially when the equity market, I think, is so sensitive with the Fed meeting coming next week. Rather than get into the rest of those, I'm going to try and split it out and spend a bit more time on the commodities. So with that, here's our transports. And again, I covered this on the Don't Ignore This Chart, the Chart Watchers newsletter this weekend. But the transports are still mired in a sideways range, downtrending relative strength, so nothing really bullish there. On the weekly charts, again, full stochastic is pointed up. We're trying to break through this downsloping trend line, but we're right at zero. Any sort of a rollover here, I think, would be a pretty important indicator. And the RSI would suggest this is about when it would happen. Airlines didn't have a very good finish to the week, although they had a good interim part of the week. They really soared and then gave it all back. So watch closely. PPO rolled over right where it always rolls over on the airline. So they they could perhaps be setting up for another leg lower. I want to talk about the weekly railroad, and again, I mentioned this earlier. We've got the 4-year uptrend here, but we've just broken the 2-year uptrend. I think that's something significant. And they talk about a very confusing market. So we've got this long-term uptrend. I continue to see a lot of oil move by rail and stuff. So I'm not expecting a dramatic reduction in the railroads. But the main point is if the charts are starting to break down, it could be a clue for us like it was back in 2015. Okay. The trucking, this is an interesting chart, and one of the reasons I say that is it is really trying to rally back up, and they had such odd earnings. They were very ugly numbers, and the trucking company said lots of problems with demand, and yet we're rallying right back up to where we've been stalled here since November of last year or whatever. Anyway, downsloping 40-week moving average trying to turn up right here with this big push. So we'll see if there's anything there. Look at the huge volume that showed up last week. I don't know if that's a blow-off volume on options expiration or what that is. But keep watching. I think if they were going to roll over, the RSI says it's right about now. Okay, autos just got crushed with Tesla and Ford both having tough numbers. Look at that down candle. That was pretty major. So nothing bullish about that. Real briefly, let's cover the broker-dealers for one reason. They're trying to get through this horizontal resistance. They've done it once before and they rolled over, and guess when that was? Right at the end of April, and when they gave it all back. So that's a close an area of the market to keep a close eye on as we head into this week, and we'll see if it gets any more upside pressure. That would be nice. Okay, utilities, just holding in the range up here. Some people said utilities had a big down week. Yeah, the stock market had a big up week and the utilities didn't, so they underperformed for sure. But it's hardly that the chart is breaking. I will say the PPO is just about to give us a sell signal, so we'll see if they're ready to fall. Once again, XLI 2 weeks ago tested this high, fell away last week, pulled back up, so it's trying to hold up here. We'll see. There's an uptrend here in momentum. It's now turned back up, so we'll just keep watching. But again, if this starts to roll over, that would be a clue for me that we got bigger issues coming. And just keep an eye on that chart over the next few weeks. The semiconductors didn't have a very good Thursday, Friday, I think. Here they are in the Zoom panel over here. So we had this big, and doesn't this look a little bit like a blow-off move? All the way up and then settled in the bottom of the range twice. Both days tested the bottom of the range and closed near there. So any sort of a breakdown here, and I would call this a failed breakout on the semis, and that would give me more cause for concern, especially after a parabolic move up for 2 months. Okay. Just want to go down into the commodities, and this chart is ugly. We're still hovering down here in the 177 range. This horizontal line at 182 has been in place forever, and if the US dollar wants to surge up, I would expect that might be when we get another breakdown in commodities. So just keep watching that. Here's the CRB on the weekly, and we got a PPO rollover right at this trend line. Gee, who knew? And then it looks like we got a big test coming next week to see if it crosses the signal line back down to the bottom. But we closed almost on the bottom of the range this week, and I think that bodes poorly for a lot of these. Now, DBC, the ETF that tracks commodities, that doesn't look that bullish or bearish. It's just a downtrending 200-day moving average. PPO's at zero, so we don't know which way it wants to break. We're at the bottom of the price range. If it doesn't hold here, I think that's pretty bearish. So we'll keep watching, but to me it looks like it's going to go lower. Oil below its 50-day or 10-week moving average. Same thing with natural gas. Natural gas actually made a new closing low for the move this week. Just keeps getting uglier if we just widen out this chart. You can see we've got one period in here where we had a lower level, not much lower, but it was in that 2016 period where we finally got down here. And again, one of the things about commodities, so just to make sure everybody's aware, commodities are wonderful because they go down to an extreme, and when they reverse, they can be wonderful rallies. It's always hard to pick the low. If any of you were in on this trade with me where we were trying to get the nat gas turning higher and it just rolled over quickly, That's part of the trade, and what we're waiting for now is just to see if this can hold down around these 2016 lows as we head into the fall. It might not. I get the feeling the whole sector is still weak, but again, for commodities, now that they start making major lows, we probably want to look at them, not ignore them. Heating oil is below the 10-week, just barely, might actually be above it, but I'll call it at it. And then gasoline is below the 10-week as well, and they're both pointed down, so that's not very good. Looking at corn and wheat, they both failed the 10-week test this week, and soybean looks like it's going to turn down here after getting up near 52-week highs. So more weakness in that sector. Gold has not done much for the last couple of weeks, albeit just barely off its highs. If you look at it on a daily chart, and we will in a second, it's just oscillated back and forth, so nothing really there. This big move out of silver is kind of important. There's this red trend line is drawn on this low. If you draw it on this high, we're back up to that kind of level right in here. So we'll see if it holds up. I think the problem is with the US dollar going higher, we might get more pressure on these commodities. There's a few charts that make it look weak. Copper, this looks, just unbelievably frayed wire. And if this starts to fail here, I think, a 3-year low in copper would tell us something about global growth, and that would be a big hiccup for me. So watch that line very closely. We've got a 262, a 264, and a 262 weekly closing low. So let's watch this week and see if that holds up. Livestock, at least heading up a little bit, back above the trend line. Nice to see. Sugar and coffee, not so good, both below their 10-week moving average. Coffee rolling over again. Looking at our good friends in cocoa, back below its 10-week moving average. Cotton still below its 10-week moving average, so no help there. So as you're getting the feeling, a lot of these commodities are down there. Here's the marijuana ETF breaking this relative strength trend line to new 1-year lows. We'll see if it can finally turn around. That's what happened in July, August of last year. There is a move into edibles that is coming in Canada this week that might kind of change these charts, but they're pretty weak, and this downtrend continues in momentum. So not really comfortable that things are going to get better there, but I'll keep watching it. Coal below the 10-week, steel rolling over, but not below the 10-week yet. So that's a little bit positive. Lithium above the 10-week, rare earth metals below, but as you can tell, everything is below downtrending lines, so nothing really bullish there. Energy at the edge of the wedge. We'll find out which way this is going to break. There's a little bit of hope, slightly lower, but quite frankly, I expect this to roll over and go down just the way the market looks and the price action is on the oil stocks. And if you look at Cabot Oil and Gas, it just got smoked this week. Let's just go put that in. So you see these stocks, like look at this gap down. I mean, these are just horrific charts. And again, it doesn't look like they're ready to go higher. So the precious metals chart, again, working higher, but I want to talk specifically about that. We're back up in the same range as this 2016 period. We'll see this uptrend just kind of jog sideways and then continued to move. The gold miners actually were a much straighter trend higher. So I don't know if that'll continue to work. I want to show you the industrial metals here. And what you see on this chart is horizontal support and resistance being broken. We've got a downtrending 40-week moving average at the same level. And we're trying to hold this. PPO has turned up, but as you can see, we're in a pretty important place on this chart. Let's watch and see. But I think we need some good news on the trade front before that chart's going to break. And here's the total return commodity index, and this downtrend is fired up, and you can see the PPO just recently rolled down. So which way is it going to go? It doesn't look strong enough for me, and I think the energy sector will drag that lower. Looking at the XLE, this is a serious downtrend. We're sitting right on the 50-day moving average or 10-week moving average. It is flat. If it was to bounce here, that would be very bullish, and I'd love to see it. But the energy charts really started to crack this week. Speaking of crack, we're up against the 40-week moving average. PPO is below zero and just kind of flattening out. So we'll watch and see if there's any momentum here. But this long trend line going back to 2018, just that's what we'd need to break. Full stochastic flatlining at around 50. Normally that rolls over and that would be a bear market. So you can see during the big uptrend here, it stayed always near the top half almost all the time with this exception. Now we're on the other side of it where it looks like we might roll over below 50 or at the 50 level. That's bearish. Frac, drilling down in the bottom right hand corner, no good there. Sound waves coming out of this suggest lower lows. PPOs rolled over and heading lower, full stochastic doing the same. One thing about commodities, we like to buy them near the lows when they turn up. That doesn't appear to be in the charts just yet. Okay, crude oil, again, sitting here at 56 bucks. We're at the end of the wedge here. We'll find out which way that wants to break. I'm going to head straight down to copper just briefly. I want to show you the importance of this uptrend line. Again, if copper starts to fail here, that's a pretty important level. So don't let that go away. On the, let's get into gold. Just a few minutes left here with gold. You can see, this consolidation working sideways for 6 weeks, and we haven't really seen any real action, albeit the selling weeks have still been lower than the big tall candles on the upper weeks. It's this sideways movement that it seems like the move is kind of stalled. And we haven't made new 52-week highs yet, even in gold compared to the S&P 500. So that's a concern. Now we'll just look at these gold charts a few different ways. You can see this uptrend is broken. In relative strength, it's broken. In PPO momentum, it's coming down. Now it's still above zero, so that's not all bad. But look at which days are the big days here lately in the volume. So back here it was all green candles on the big volume days, and the red days were lower. Now we're exactly the opposite. So be careful here. These gold charts start to look tenuous with the rising US dollar. So this looks like a nice consolidation above the breakout. Maybe it just pulls back to 1375 and we get a chance to get going again. That's not the way the charts feel to me, but I've been wrong before. There is an uptrend here on the PPO, and it still looks very good. Again, this is a weekly chart. That's bullish. But what you could see happened back in 2016, and I've got some more examples of this. When this chart rolls over, this is a pretty critical place to watch. Here's GLD, and the one thing I want to show you on GLD is the PPO has gone almost flat now in terms of momentum, and it's the same sort of price action we saw back here in 2016. So if that's going to just go sideways for 2 months, at least be aware of it, and perhaps when it tests the lows, that might be a better place to get an entry back into the chart. GDX, this still looks okay, but it ended up pulling back off after this big move up this week. It closed near the lows of the week, so that's not quite as bullish. And we didn't have any extreme sort of selling volume this week. I loved the setup back here in June. I'm starting to get worried about it now that the US dollar failed. So we'll keep a watch on that and see. This is a trend line on GDX compared to GLD. And when that trend line broke back here in 2017, that was a good place to be watchful of. You can see that was kind of the move that happened right here. We're at that same sort of place on the chart, so be careful here. If this all starts to roll over, just make sure your stops are in place so it lets you keep the profits you've made. GDX compared to the S&P 500 still uptrending, and if that was to break, that would be a concern for me, but we're not quite there yet. I will show this gold versus the S&P 500 chart, and what we're starting to see here is this rolling over, and look where momentum is at, right at zero. So if this was to fail, that's kind of what we've seen, a major place to be aware of as this chart has rolled out. Lastly, here's silver, still holding up near its highs, but again, not that big a deal because we're sitting right near the bottom of the range. Momentum is just trying to go positive. And I'm just going to jump on to the, hit a wrong button there. And lastly, I just want to cover off natural resources in general. Looks like they're failing right at the 40-week, so be careful of that. Thanks for taking the time to join me. Hopefully there's some ideas for you in there. I think the US dollar is a little bit iffy. We got the Fed meeting coming up this week, end of main earnings period, so lots to watch. Thanks everybody. Have a great week. Bye-bye.